today we had two key events that happened in the Asian session. The first being Governor Ueda's speech in front of Parliament, which sent the Japanese yen tumbling, and also the RBA had released their meeting minutes from last week's policy decision to cut 25 basis points to 3.85%. And the meeting minutes showed the justification was due to domestic economic factors, but the Aussie dollar did not move much based on that, instead moving more on the US dollar rebound. So let's take a look at the charts and see what's happening. So just a few notes on what happened with Governor Ueda's speech this morning. So the yen tumbled because Governor Ueda said that the Bank of Japan has no preset plan for rate hikes, and they will only raise interest rates if the economy and prices move up in line with forecasts. So this is a change in tone from its messaging from the last few months, where they have been signaling rate hikes if economic and price conditions continue to improve. And today's shift now appears to acknowledge potential weakness in the Japanese economy. He also had noted during his speech that underlying inflation is likely to gradually accelerate after a brief period of stagnation, which shows that inflation may increase without the need to increase rates. One other thing to note as well is that the Japanese media reported that Prime Minister Shigeru Ishiba may call a snap election if the main opposition party submits a no confidence motion. Let's take a look at the chart to see how the USD Japanese yen pair reacted upon Governor Ueda's speech. So if we look at the US dollar yen pair on the 5-minute chart, we can see that there has been a rally up from the start of the Asian session this morning, and is now consolidating at around 142. So give or take, there is a rebound in the US dollar this morning. So I would look at the immediate key support and resistance levels to be 142.37 and 143.58. So just keep a look at those two levels to see if the US dollar is going to break higher or if it's going to continue its downward trajectory. If we look at the RBA minutes, it showed that the board considered either holding rates or cutting between 25 basis points and 50 basis points. The reason for settling on 25 basis points was due to the several uncertainties in the outlook for productivity growth, the labor market, domestic consumption, and global trade policy. So by choosing 25 basis points instead of 50, the Reserve Bank of Australia has prioritized stability and data dependence over aggressive easing, which gives the board flexibility to cut again later if needed. So it is something positive to look at. Also worth noting is the Australia's minimum wage is also set to rise by 3.5% in July, which is above the current inflation rate of 2.4%, and this is going to feed into future wage and employment data ahead of future meetings. So I won't be surprised if there is a potential to hold in future policy meetings. Let's take a look at the Aussie dollar chart to see how price is moving. If we look at the Aussie dollar pair on the 5-minute chart, we can see that it's been on a decline since the start of the Asian session this morning, and the RBA meeting minutes did not do the Aussie dollar any favors, and it broke through the key support level at 0.6472, consolidated a little bit at 0.646, broke through that second key support level and is now testing it again. And we will have to see during the London and New York sessions today if the downward trajectory is going to continue or if we are going to see more US dollar weakness, which would mean that the pair could test 0.6472 again in the next few hours. So what I'm going to watch into the London and New York session, we have the Euro core CPI flash estimates for year-on-year coming up. The previous was 2.7%, with the forecast expected to be lower at 2.4%. So if it comes in lower or as expected, the euro could be sold as markets price in increased odds of an ECB rate cut happening on Thursday. If higher, there could be a short-term euro rally leading up to the ECB meeting on Thursday as well. We also have the GBP monetary policy report hearings, and what we want to note on that is the tone and language used by the Bank of England Governor Bailey and the other MPC members, because this will guide today's GBP moves. Lastly, we have the US dollar JOLTS job openings, where the previous was 7.19 million in jobs, and the forecast is to be lower at 7.11 million. So do watch for a softer JOLTS print, because after yesterday's weaker ISM manufacturing PMI, if today is also soft, we could see the US dollar drag lower in the lead up to Friday's NFP. So that's it for today. I will catch you in tomorrow's Tokyo Close Wrap. Remember to stay sharp and stay nimble in your trading. This has been the Market Note, and I'm Shalini. Catch you tomorrow.